The large but relatively quick downtrend provides a suitable interval to capture moderate swing points in the slower uptrend towards 2016. Trend lines provide complementary additions that often intersect near where price trades near the region of the intersection of a vertical interval line and a horizontal price level. Since the approximate time of the head of a Head and Shoulders is captured close to an interval line, the same interval is useful during the downtrend and recovery. A much longer interval from the sharp upswing to the head of the mid-2017 Head and Shoulders is not useful in this context because a Head and Shoulders drop is large but often relatively quick. The large interval would not cover bearish continuations in the Head and Shoulders downtrend or even the key stages in the later uptrend reversing back up to reach for newer record highs. Using the left shoulder section is a first choice for assessing the Head and Shoulders. Using the left shoulder references earlier context more suitable for the period of the Head and Shoulders downtrend and the early stages of the recovery. Using the left section of the head is more recent context. It is more valid for use with the progressing recovery to new highs and stages in the early 2018 drop. Intersection of trend line, price level, and interval line identify an area and time range of potentially greater resistance. However, the first area, marked with a gray rectangle, is not relevant since price doesn't trade near it. Using the right side of the head produces a smaller but still useful interval for greater detail of smaller features in the downtrend and uptrend. Using the right shoulder portion for an interval provides similar results with an interval roughly the same length. This identifies the crucial neckline break time period in addition to similar continuation areas in the downtrend and uptrend. The Head and Shoulders demonstrates how various sections of a pattern can be used to identify an interval for stages in the pattern's trend and reversal. Similar to the fixed price to time conversion, fixed time cycles and intervals can be expanded by moving a decimal place to the right. In this case, 28 bars goes to 280 bars. However, this can result in less precision even if major features were covered by the longer interval in the past. A large distortion, such as from the 2010 flash crash, can distort a time interval similar to how it can distort Fibonacci ratios for less precise results.